Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Friday. I'm Andrew Gagan. Thanks for joining us as we wrap up the day and the week. So, negative day for this Friday. In fact, the S&P ASX 200 off by around 0.2%. Similar moves there we can see on the CBO 200. Now for the S&P ASX, it has lost about 0.25% over the last 5 days. So a negative week as it turns out. That is sort of reflecting what we're seeing more globally as well. In fact, today, Japan's Nikkei, that share gauge index there falling, I should say, 4%, led by that loss in the chip makers, which we saw on Wall Street as well. Also obviously concerned about what's going on in the Middle East at the moment. Taiwan, stocks are sold off almost 6%. Just in terms of what's ahead for the Friday session on Wall Street, Nasdaq futures off 1.5%, S&P futures off almost 1%. Gold also in the firing line there has fallen below $4,000 an ounce, and Brent crude jumping 1% to $85 a barrel, climbing for a fifth day, particularly on what's going on in the Middle East and the likely inflationary effects of what we're seeing there, with the US having struck an oil tanker near Iran's main export terminal for the first time since the restart of that blockade. All right, so that gets us to the themes of the day. Let's take a look. Friday funk certainly is on the local market. Coles checks out. Yeah, that's... look, it was considering Greencross, the petcare company, for about $4 billion. It's backed away from that, and investors have rewarded it. They are sort of breathing a sigh of relief, essentially. Trump. Seen a few of those, haven't we? Well, the latest being just in terms of what he is alleging in terms of electoral interference by China, alleging both the 2020 election, that was electoral interference by China. Of course, that is the one he lost, having won 2016 and 2024. Interesting to know what the repercussions are of that, although we have heard from President Xi, made no mention of what President Trump has had to say. The two leaders due to meet in a couple of months' time. Let's get to across the sectors that have moved today. Then mining, certainly feeling the pressure. That's the worst performing, led by the losses there in BHP, with an analyst also saying perhaps that the big miner is overvalued at currently $57 a share. Rio Tinto also falling along with the other iron ore miners there. Elsewhere, energy, well, that has bounced high given what is transpiring in the Middle East, led by Woodside up 3.5%. Healthy gains there. Tech, well, that has come under pressure, although zeros bucked the trend. It was finishing up 1% there, but obviously we saw that big sell-off in chip stocks globally overnight. Let's catch up with the top stories of the day then. Now, Telstra, chief executive and her other executives have faced a Senate inquiry over last week's nationwide outage, saying the company is still calculating the cost of that and the impact on 000. Elsewhere, Coles has entered its takeover discussions with TPG Capital over potential $4 billion acquisition of a vet and pet care group Greencross. REA Group has agreed to divest its India business while increasing its stake in Aurum to almost 25% following a strategic review. And Zip, that's also strategically made a move. It's exiting its New Zealand business to focus on the faster growing and more profitable Australian and US businesses and corporate travel management, saying Chief Legal Officer and Company Secretary Shelley Sorensen will step down next month as the company remains under ASIC investigation. So let's get across all those market moves we've seen over the week and what's ahead. We are joined by Shane Oliver from AMP. Shane, welcome back. Good to catch up with you. So dominated, of course, by more developments out of the Middle East. Despite that, of course, beginning of earnings season stateside as well, some really stellar results by the banks. How would you weigh up the pros and cons of what we've seen this week, particularly as it's played out on share markets?
Look, I think it's fairly messy, and that's why shares in the US are only down about 0.5%. I think in Australia, as you were just saying, what are we down 0.3, 0.4% for the week. So we have got some horrible news in terms of the Middle East, as we were discussing over the last few weeks. I mean, that peace deal was always quite shaky. And of course, that's now unravelled. We've seen an intensification of the conflict again, and that's put upwards pressure on oil prices. But even then, oil prices have only gone up, $12, $15 from the low. They're still way below where they got to a few months ago. But so if you look at Australian share market and US shares, not a huge impact. I think other markets are being impacted by other things. If you look at Korea there and Japan to some degree, they benefited on the way up from tech exposure. And of course, now there's those worries about AI again. I mean, these things keep resurfacing every so often. Worries about the sustainability of the AI boom and demand for AI-related chips. That's particularly weighed on the Korean share market, along with regulatory issues, monetary tightening by the Bank of Korea and so on. And it's also weighed on Japan. So you've got this mix of forces globally, negatives in terms of Iran and oil, negatives in terms of worries about the tech story, although that's a perennial thing in recent years. It flares up as an issue, then it fades away. Maybe it's an issue just coming into the profit reporting season, so we'll have to see what those profits look like. Then, of course, we did get some positive news out of the US. There was a concern the Fed may have to raise rates in July. That now looks unlikely, given the inflation numbers we got for June, which do show some moderation. Of course, as some Fed officials point out, it's just one data piece, and other inflation numbers are still kind of worrying. But you can see in that chart there, the US core inflation rate does seem to have come off a little bit. You can also see in that chart there just how far out of whack we are in Australia. Through much of that 22, 23, 24 period, we were in line with global averages or at times below. Now we're at the very high end, which I think still biases the RBA to hiking. I think the Fed won't hike in July, but there is a high risk that it could go in September. Because there's a lot of cross currents there. Tariffs are about to ramp up again to some degree. But most importantly, AI is leading to higher costs and higher prices because of the massive demand for memory chips and semiconductor chips. So that's a bit of an issue for the US, and at least will keep the Fed on edge. So I suspect it remains a fairly messy environment for shares for the next little while. There is a risk of a further correction. We are coming into the August-September period. Do I think markets will be okay by the end of the year? Yes, I do. I don't think it will be a major bear market, but there is this risk that we could go through another bout of volatility.
Well, and also obviously renewed concern about the inflationary effects of higher oil prices, courtesy of what we're seeing out in the Middle East at the moment. Shane, obviously with the key prices there having jumped this week, given that the renewed hostilities between Iran and the US. In fact, I think we've got a chart illustrating what we're seeing with global oil supply. I guess the question is how long this goes on for, how long the Strait of Hormuz remains closed and therefore impacting that oil supply.
That is the big question. You can see there has been a hit, but it's I think at the low point there, from the high point earlier in the year to the low point, was about 13 million barrels per day. So it wasn't quite the 20% hit or the 20 million barrels per day that had been talked about at the time, because oil could be diverted through that Saudi east-west pipeline and the UAE's pipeline that goes out of Fujairah. I think that's the correct way to pronounce it, right? At least I hope it is. And so that has meant that rather than 20% hit, or 20 million barrels per day, it's like 12, 13% or 12 to 13 million barrels per day. But we're still running down global reserves. They're still arguably above where they were in 2022 on data from the International Energy Agency. But the problem is, the longer the strait remains closed, and that 12 to 13% of global oil supply is not getting out, and you can see there the shipping has ground to a halt or ground to a very low numbers again, then sooner or later the world will have to contend with that real hit to supply, even though over the last 4 months we've been able to get by running down reserves. There has been, I should point out, there has been some efficiencies, more people buying electric cars and so on. That's helped, but I don't think it quickly solves the problem. And if there is a continued escalation here, I think as you mentioned earlier, the US striking a Iranian oil tanker at port in Iran, if that sort of escalation continues, and Iran then retaliates again, and it goes on, then there's going to be a significant problem. I guess the flip side is that well, Trump's been talking about the Iranians calling and wanting to have talks again. I don't know whether he's imagining that or not, but because he says that so often and then nothing happens. But often when he says that, it's a sign that he wants to talk, that he wants to do a deal. So maybe he does want to do a deal, because the longer this goes on, the more the gasoline price goes up in the US, the more his approval rating goes down, and the worse the Republicans will do in the House and the Senate in the midterms later this year.
Well,
so I think there is pressure to cap it at maybe 90, no more than $100 a barrel, but yeah, the risks around that are very high.
It appears he's trying to get ahead of the curve there as far as those midterm elections are concerned, given what he's just addressed the nation in the past few hours. Nothing about the war, all about electoral interference from the Chinese. Perhaps forwarding that's like, you can't believe, you won't be able to believe the result coming up in the midterms. That appears to be how he's setting up the American public.
He's setting it up, isn't he? Of course, he doesn't mention the Russian interference in 2016. Mainly because the alleged interference was on his side. But they don't get a mention. It's just the Chinese get a mention. But yeah, classic case of wag the dog, distract everyone from the real issues, and set. I think it's setting up this narrative for them to be able to challenge the midterm election results.
Yeah. Now, Shane, you've always got a musical theme weaving your way through, particularly a Friday note. I know you're an Elvis fan. And, well, his song, a little less conversation and a little more action, you saying that clearly applies as far as Australia's economy is concerned, and perhaps what we need in terms of economic reform. I notice, as you've pointed out there, it's been a bit of a remix done on that song as well.
There has. That song was first in an Elvis film called Live a Little, Love a Little, which is one of my favourite Elvis films from 1968. It's often one of those movie films that sort of got buried, but it then got resurrected in 2002 by a remix by JXL and went to #1 in Australia. And recently I've discovered this guy called Josh Wildfire, a YouTuber, who seems to put out a remix of an Elvis song every week on Thursdays, I think it is. There's a certain time he puts them out, and it's just amazing the way he churns out these remixes, and it's just an amazing song, that one. But I was just thinking about, we spend so much time in Australia about falling living standards, cost of living crisis, a lot of talk about it, not just in the last couple of weeks, but over the last few years. But the core of the problem is well known. It's the lack of productivity, and we've also spent a lot of time talking about that. So I kind of think that we do need to see some more action on these things. There's a lot of talk about it going into the budget. In the end, we just went down a rabbit hole with negative gearing and capital gains tax reforms. You can debate whether they were useful or not, but in the great scheme of things, they're relatively marginal in terms of the productivity challenge. So I am hopeful that at some point we will see more action on this front, rather than
mind
just
you,
ongoing conversation.
Obviously the Prime Minister addressing the nation yesterday just in regards to AI and a strategy there, you would think, well, particularly given what we've seen elsewhere, particularly in the States, and how AI can improve productivity.
Yeah, it's good to see that the government's trying to get ahead on this. The Prime Minister made reference to social media, and if we knew the damage it could have caused, we could have better protected our children, Australian children, through this period, rather than waiting to see what happened. But of course, you often don't know in advance. And of course, I think the key is getting the balance right here. You want to have an appropriate framework. You want to have regulation. You've got to have cyber security protections and so on in place. The danger, though, is that you end up going overboard. You over-regulate, like we've done with the housing industry, and then we wonder why we don't have enough supply of housing. And the danger here would be that we end up wondering why we're left behind in terms of the AI boom that other countries may be getting the benefit from. So it's about getting the balance right, and so far it's still a wait-and-see approach, lots of talk. Hopefully we do, but there's a high risk that we do over-regulate, because we have a tendency in Australia to do that, I think. This concept nanny state does apply to Australia in many ways. I mean, there's a beach near me. If I go down there was a sign there for many years, and I think it's still there, that says, warning, uneven surface ahead. In other words, when you go onto a beach, there's sand, and the sand is uneven. I mean, Blind Freddy could have told you that, but we spend a fortune putting a sign up. I don't mean a fortune, hundreds of dollars putting a sign up to state the obvious. It's just an example of how we've become a bit of a nanny state, and that risk could flow through to AI, that we end up missing out on the benefits because we over-regulate it.
Yes, that great Australian pastime of navel gazing. Shane, great to get across it. I don't expect you're going to be at the beach this week, or this weekend at least. The weather is looking pretty foul, particularly on the East Coast, given we are midwinter. Nonetheless, enjoy your weekend break. Thanks for joining us on AFP.
Thanks, Andrew. Take care.
All right, let's get to our stock of the day, and it was REA Group. Now, that's off the back of that news. It's divesting its India business while increasing its stake in Aurum to almost 25% following a strategic review. Nadine caught up with Luke Winchester from Merewether Capital and Matt Griffin from Maple Brown Abbott.
From a narrative point of view, from a management focus point of view, I think this is a good signal. I think they've got some headwinds here in Australia that needs to be focused on. Remove the noise of international struggles and things like that. Makes a lot of sense. So I'll be positive. I'll say a buy on REA, but maybe just given that sentiment, given the outlook, this is one you're not sort of jumping into head first, just maybe picking up a position over time or slowly adding to an existing position.
We like the story, but how we're actually playing it is through News Corp.
Okay.
News Corp are the majority owners of REA. With News Corp, you're getting the REA stake, and you're actually getting some pretty good businesses in the News Corp stable as well. You're getting Dow Jones, which is growing on the regulatory compliance side, and energy software business. And News Corp actually could be an AI beneficiary in the publishing side, having to do deals with AI where they're going to have to start paying these publishers for some of their content. So all that wrapped up gets you a much cheaper valuation, better entry point into REA. So REA is a buy standalone, but we actually think it's better through News Corp.
Okay, so there's a bonus buy, as I like to
Exactly,
call them on this program.
All right, let's return to the here and now with the best and worst in today's trade. Then AMP, off the back of its recent update there, it's up another 6.5% odd. Woodside, the energy sector, getting a boost with another rise in the oil price, given what's going on in the Middle East. Domino's back on the winners list there. Brambles, GQG Partners rounding out that list. Those that have fallen into the red. Mesoblast, profit taking. The stock's up about 30%, or was at least, over the past few weeks. 4D Medical has come off, almost 15%. A lot of pain being felt in the gold sector at the moment. Regis also updating the market today. And similarly in the uranium space as well. Now, tonight we do get inflation read for June out of the EU. Also housing starts in the US and industrial production. Next week, brief look at what's going on. Monetary policy decision from the ECB, also inflation data out of the UK. I should also note they're set to get a new Prime Minister. Andy Burnham assumes the leadership of the Labor Party tonight, in fact, Friday, and will become the next Prime Minister, I think the 7th in just the past few years, early next week. Also, those US earnings continuing, among them Alphabet, Tesla and Intel. All right, so let's return to where we have finished. Look, the SIBO off by around 0.6%. I'm just taking a look at the S&P ASX 200. It's made a bit of a comeback just in the past few minutes, ending down around 0.5% to finish pretty much flat for the week. So just a bit of a push towards the close there. That is the COB. Thanks for watching and listening.